Hey everyone, it's Evan here from the Trade Risk on Tuesday, May 29th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So originally I was thinking I was going to punt this midweek video to Wednesday just to give us enough market action to, to really kind of change the market analysis, the price structure, just given the fact that we just did a weekend recap on Friday. But it was only one day of trading, but we saw enough movement today that I think it's worth talking about markets and pointing out some levels, some things that have happened here, because we did see a decent sized move and reaction to kick off the first trading day of the week here on Tuesday, because markets were closed yesterday for the Memorial Day holiday. So let's jump into it. We're going to change the order a bit here. Instead of going through the S&P 500 weekly, daily, and then switching to the moving averages, I'm going to kind of jump around just a little bit more and kind of tell this high-level narrative of what's going on right now. So the S&P 500 today on Tuesday was down 1.16% to finish off the day. That was off of the lows of the session, but still a fairly crummy day. Sellers were in control for the S&P 500. And it's really for the Dow and the S&P 500. And this is kind of the story that I want to discuss here. We switch to my other board. So when we look at the Dow Jones, this was down 1.57% today. This was the biggest loser on the day in terms of relative performance of the U.S. major averages. And from a technical perspective, the Dow Jones now is the weakest, I would say, of the major averages. We are below a 20-period and 8-period weekly moving average here, and we are threatening to break down. We've given back almost all of the gains here, or the progress from back on the 11th, when we saw equity markets really see this nice move to the upside. So the Dow Jones is telling the story of a breakdown today, where the past 2 weeks worth of trading range has resolved lower, maybe a short-term top there, and we are heading back very clearly into this old range and really targeting 235 on the downside if we are going to continue to the bottom end of this range. The S&P 500 not far behind. It's a slightly improved chart. Notice we look here at the SPY. You can see, let me clean it up a little bit. You can see we did still break down of the past 2 weeks range, but we are still holding above, say, this downtrend line that extends from the January highs. We back tested it today and saw again about a 1.5 rally off of these lows, and there is still some hope here for the SPY. It did break down in the short term, but we want to see if the bulls can kind of step in here and continue to stabilize this, and maybe the worst is behind us in this very short-term pullback. So the S&P 500 down 1.1%, still got some damage behind it, but holding up decently well. Or I don't want to say decently well. It's still got a couple of notches against it. The Qs here are holding up well. The Qs here, you can see, are much more resilient, down a little less than 0.5% on the day. It's still holding above a rising 8 and 20 period moving average here on the daily chart, and it's kind of basing right out at the top end of this range. So still yet to be seen. It didn't get a breakdown day like the SPY and Dow did. The NASDAQ 100 here is really holding up and staying pretty resilient. Hasn't quite broken out, but still just giving us a very neutral signal there and holding the short-term trend. The Russell 2000 is the strongest, and it's remarkable that today it did manage to nearly close green on the session. It was down just slightly on the day, 19 cents in the IWM, and you can see here it really came back down and retested once again this old breakout area back around 160, which were the prior all-time highs that this market broke out from earlier this month. It is holding above bullish trend. It is the strongest of the major averages, and quite frankly, this chart continues to look very healthy here and constructive in the short, intermediate, and long term across all time frames. So when we think about what's going on here in the market, is we have very, very kind of split action right now. We have really on one side of the camp, we have financials, materials, industrials, frankly, bonds, right? These groups, these markets here are all telling a more pessimistic story here in the short term with these breakdowns and with some of the price movement. And on the other side, we have technology like Hughes. We got semiconductors, which are holding up well. We have biotech, which are holding up well. We have the small caps holding up well. Breadth is still holding up fairly well. So we have a very kind of split narrative right now, and we really are just interested in seeing which of these two sides here is telling the truth, which is going to lead the market to victory. Is the Russell 2000 and the Qs going to break out, and that's going to help kind of stabilize the SPY and the Dow, and these eventually will get some rotation and put in some higher lows? Or is it the Dow and the SPY that are going to break down first, continue lower, and really just take all of the upside momentum away from the Russell 2000? That, I think, is the narrative. And the fact that things are so split right now, you know, again, I think sector rotation is a good thing. We're always going to have sectors underperforming and outperforming, but to see such stark contrasts across some of these major averages is a little more concerning in the short term. So, you know, generally the advice here is do less, sit on your hands more, stay patient, just wait for some more confirmation to come through, wait for these weekly bars to close. That's a good way to smooth out the noise as well. But everybody's got different approaches, timeframes, and strategies. So you're going to have to kind of figure that, you know, figure out your activity level on your own. But, you know, for me, I came into today flat. We came into today flat. We left the day flat as well. So we did absolutely nothing today. No exposure on through the weekend, no exposure into tomorrow. So waiting for just a little more clarity to set in here in the short term. I could make a good case for both the bull and bear situation. And when there's that much evidence or that many mixed signals out in the market, I tend to just want to do a little bit less and wait for the market to tip its hand a little bit more cleanly. So I think that's, you know, really the summation of it all. You know, we can look at some specific levels for the SPY. It's really reclaiming this 271 or so. I don't like in the short term that we broke down from this range, but if tomorrow we just saw a sharp continued recovery, V-shaped rally, a reclaim of 271 starting to turn green on the week, then I would suddenly look at this and say, okay, you know, this seems to be a quick false breakdown here, tipped everybody, ran some stops, and now we can, you know, clear the way to the upside. But until and if that happens, then I want to be a little more cautious. So 271 on the upside, anything below today's lows, frankly, I think is going to be troublesome for the bulls heading into the end of the week. Russell 2000, I think the levels here are pretty clear, lows from today, and then, you know, really it's just kind of potentially shaping out to a bull flag or a little upper level consolidation up here right underneath all-time highs. So if we start to move above 162 or so, that's going to get me pretty excited there on the bull side. And then the Qs, I think, are probably the most well-defined above 170.50, above 171 if you want to give it a little more room. That would really start to ignite this to the upside, and then on the downside you're talking about 166 or so. So those are the levels I'm paying attention to, and I'm also, for the Dow Jones, pay attention to that weekly candle. It's a pretty ugly looking weekly candle here so far. It's only 1 day worth of trading, but you know, if we close below 244, 245, really below some of these weekly moving averages here, that doesn't necessarily bode well for the short to intermediate term. So that I hope covers some of the major markets there. Really just kind of telling that story, the tale of two camps. We look at the TLT here, and just a absolutely remarkable move off of these lows. Fascinating to see how sharp of a rally this saw off of this 117 level, when everyone was sort of you know, looking at this as potentially being the, you know, the cliff that we're about to really roll over from and get nasty here in bonds. We just saw that complete reversal and just a very high volume push all the way back up to these March highs here. So again, this supports kind of the bear case here, where suddenly we see bonds, our bonds getting it right. Generally speaking, the old adage is, you know, the bond market leads the equity markets, and the bond guys are smart money, and the equity markets, credit markets are smart money, equity markets are generally there to follow suit. So if TLT starts or continues to scream higher here, you got to really question about the S&P 500 or U.S. equity markets in general. So TLT weekly chart, reclaimed all these moving averages here. It's back into March, April resistance. This was a very sharp move for TLT in just 5 days time. So it is short-term overbought by quite a bit. It is stretched, but momentum is a fascinating thing, and I would not want to fight that necessarily right now, but it's at some clear resistance with some short-term overbought signals. Next up, if we go to USO here, down 1.24%, you can see it's getting that rebound right at this trend line that extends from the February lows here. So the lows of 2018, if we were to project this trend line higher, you can see we undercut it. We filled any gaps that were open back here, at least in the USO ETF. We do have an open gap back here from the 10th. But you can see here, it did close right at that trend line. So short term, perhaps a little oversold there as it made a swift move lower of about, what, 6, 7, 8%. And now trying to rebound just a little bit. So if you're short, if you're aggressive, short term, tactical, probably get some good play here now that volume's picked up and this market is very much in play. Swing trading, you got to be a little careful on the overnight risk is a bit elevated right now in USO, but it is at this trend line. If we go to natural gas here, this also sold off today, did rebound off of these lows, very similar to USO, sold off into the 20-period EMA, and it did rebound into the end of the day, still down -2%. Volume continues to come in here. So natural gas, I think this will be a good, real sort of first test for this pullback. It did start to accelerate higher over the past week or so of trading. Now let's see if it can hold on to it. If it gives it all back, then that's certainly, it doesn't help the potential new emerged bull case here for natural gas. Finally, let's look at metals here. GLD, very, very muted on a day like today, which I think is quite interesting. Very flat today, ended up closing just down 2 cents. It was up a little bit more on the day. In fact, it was even lower on the day at one point as well. So gold kind of all over the place and a little surprising, but for me, this is kind of in no man's land right now. It is holding above last week's lows. That is constructive, but as I've been saying, I want to see it back above 124.50, 125. That would give me some more confidence in the potential bull case there. And silver did finish down on the day, higher volume, but still very much in the sideways channel. Really nothing new to report here as well. So that is the midweek video. Lots of action to kick off the start of the week. Let's pay attention to those weekly closes. Remember, you don't have to trade every day. You can wait for clearer signals or more opportune times for your trading system. So that is all I have. Thanks so much for watching. Do subscribe to our YouTube channel if you like these videos. Every Tuesday and Friday, market recap videos and some trade idea videos generally on Wednesdays. So thanks so much and talk to you tomorrow.